following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. Here's the S&Ps. Let's get right into this because I was preaching the thing was looking a little heavy yesterday and trying to use this as a little bit of a guidance tool here. And this is what stops are for. Had a runaway freight train actually closed above daily unfair highs. Now we got to really not be thinking get on the short bandwagon so heavy right now. This is still in a way, let me just, okay, here we go. In a way, looking now at this stage, we're above profiles again. I know we did this before on our daily situation, then we reversed, and that was kind of a nice thing that had happened for shorts getting back below that unfair high on the daily. Still got the same daily, and I'm going to go back in time here and just kind of show you this thing is kind of progressing forward to be not a historically extremely long profile, but this thing's been in force for a while. Haven't had any indications we're going to have a new profile here. So that in itself really, may provide some kind of, these lines get more. What I'm trying to say is these lines get more and more important as time goes on. And if these things are broken or used right now, we got to close above. Come back and retest this morning. I mean, I think the low this morning was 2070, and that line's at 2069. It's not the type of action you want to see if you're short right now. And I got stopped out personally yesterday. It was kind of an abortion as soon as that bar happened for me. But trading, that's just the way things happen sometimes, and you got to take the bad with the good. And the 240s pre-market when we started crossing above the 2059. Remember, we had kind of used that as a leverage point before, and when that strong move happened, and a lot of people were on the same side of the market seemingly, we just had some serious follow-through there. But again, that's what stops are for, and that's why we always talk about stops, and we usually talk about stops before we even talk about targets most of the time. So tough pill for me to swallow, but again, the theory is you got to be able to take your ball home every night and come back and play again the next day, and don't want to let things run away from you completely. Let them take you out in a body bag. It's just the way things are going to work sometimes. So we also talked about this exactly. Live to trade in another day. Jay. And we also talked about the dollar, and we talked about, possibly this thing relaxing down into 95.47. We actually kind of hung on to that previous weekly unfair low, and now we're just kind of sitting in the middle of a fair auction. I thought we'd just come down a little bit more. Didn't seem to happen. The dollar is, and this was the first demarcation, 96.41.42, along with that 96.46 on the weekly previous unfair high, or excuse me, unfair. Let me just make sure I'm using the right terminology here. Unfair low. But right now the dollar's back up in this 98.06.07 area, and what do you do with it now? So this didn't exactly act the way we wanted it either. The market liked it, and we're back up into an unfair high and inflection point. Let me turn off my Skype for 2 seconds here so we don't get disturbed anymore. And what do you do now? So the dollar's rallied back up into the unfair high. I think that's a good target-rich environment up there. Am I a fan of shorting this up here? That was a pretty strong move, and I'm thinking we probably need to sit tight and wait for some confirmation above this line. Unfair highs at 98.06, or just look, and I'm going to drill down into this a little bit here. Just look at our 240s. This is going to be pretty technically damaging if we get back above 98.06 and close above there. But that hasn't happened, and I think the dollar is we were a little bit, again, hoping this thing would come back down into those new weekly unfair lows. That just elevated didn't happen. So we're going to have to take a look at this a little bit later and just kind of, in my opinion, stay away from it for a little bit. Let me try to stop my Skype here. Some people are seemingly still trying to grab me here. Apologize for that. Here we go. Let's take a look at the NASDAQ. We had kind of thrown out some numbers yesterday on this one too. We had, really looked at this as a heavy situation here and thought we'd have some follow through. Again, that reversal got everybody out for a while. And now we've got such a reversal. We've got a green bar that doesn't happen very often. But what do you do with it now? I'm still on the S&Ps and NASDAQ. I'm still not a fan of going long these in a large way. So I'm just kind of sitting tight on these indices right now and hoping that we'll come back down and get back down below, especially on the S&Ps. This is kind of the barometer I'm looking at. Get back down below the 2069, 2070 area, and then we can kind of look at this a little bit farther from the short side. Okay, I'll take a look at gold really, really quick here. Somebody's asking me about that. Yeah, let's get on gold. There we go. June contract. If you got the scanner, you kind of know when these things are happening. It kind of paints the story for you. Dollar's a little bit stronger. I'm not so sure the dollar's going to continue to get stronger. That's why we were kind of waiting and seeing on that. Obviously, gold's pulled back a little bit, gave you the buying opportunity, in my opinion, around this 1208. We talked about that yesterday. We kind of hoped we'd kind of get a pullback into this inflection point. In my opinion, you've got support here. 1200 was a big area. You got 1208 sitting in here, and right now I think we could ultimately shoot for 1230 and higher. So that's kind of the way I'm looking at gold, and stops right now below 1208. Okay, let's take a look at silver really, really quick. Talked about this, 1721, 23 area. I'm not a big fan of getting long silver right now, or short actually. It's just kind of a no trade right now. We're in the middle of a fair auction on the dailies and the weeklies. That's the situation on silver. Let's take a look at the DAX, because let's take a look at the euro first. Obviously this thing, and want to kind of focus on this for a second. We talked about the leverage points up top now, 110, 52, 53. We reached a high yesterday. We talked about waiting until we got into that area. Let's see, what is that? 110.35. So we got very close to that. And let's take a look at the weekly while we're talking. So we talked about the first mark was going to be 110.53, and the next one up top was going to be 111.04. And we've reached a high this week of 110.35, 36. That happened yesterday, and we're just kind of coming off those daily unfair highs or that neighborhood. Again, if you look back and take a look at the euro in general, even with the disturbances and the rallies we've had recently in the last month, getting off the floor here, if you just kind of step back and look, it's still the gift that keeps on giving. We're coming off those daily numbers, and we're still below the weeklies. And this profile that appeared above price action, this is relatively bearish. We talk about that a lot. And what do you do with the euro? I think ultimately we're right now obviously kind of right in the middle of the meaty part of the bell curve. Let's just take a look at the 240s. Finally, this is breaking down. So I'd take a look at the leverage point on the short side being 108.78. Stops above there on the short-term trade to try to allow this thing to fall apart down into 107.02. That's the way I'm looking at the euro. And I know we've come off yesterday's kind of move up, but I think this thing could still have some legs to it, and therefore we're going to take a look at the DAX in that light. And the situation with the dollar we've already talked about, but the DAX has done nothing other than consolidate in a fair auction, and now is breaking out again. So that euro coming off more obviously is going to help this. The unfair highs 12.078. That's where you could put some stops oriented below. It seems like this thing's going to go. We kind of had that feeling before, but you got to keep turning the wrench the same way and just put the stops in and see if this thing can breathe a little bit higher. situation on the DAX. We're going to cover the usual suspects in the first 15 minutes. Let's take a look at our crude oil situation. We talked about, this one being possibly a move up. That's happened, and that's happened in the face of the dollar rallying again, which is kind of wild. And we want to take a look at the XLE and a relative sense to that. XLE, we talked about this possibly being the easier situation to deal with and putting the stops below 76.19. Had a couple of emails about this. Now, this is obviously one that we talked about that worked out. The S&Ps didn't, and this is a really, really good example of, I keep saying put your stops in, but the risk reward scenarios are what you're looking at. So if you're risking the same amount here, if you can look at your entire portfolio and do kind of monetary balancing, if you will, and obviously try not to get too over leveraged in anything that you do, considering that again you want to take the ball home and come back and play the next day. The XLE trade, putting the stops below 76.19, you got to look at those risk reward scenarios and what actually was risks and loss possibly on the S&Ps if you had gone short on that. And we want to try to say, okay, in the end, we risk, I'm just going to say, I hate to say dollar amounts, but let's just say we risk $100 on both trades to try to make $200. And those risk reward scenarios, if you continue to play that game and spread the risk out to multiple products, I'm not personally a big fan, I've talked about this before, of putting all my eggs in one basket all the time. I'm a big fan of, this is just my personal plan, of spreading some risk out to different products, playing that risk reward scenario, and hopefully over time, when you get into statistics, you want to have a data sample set that's large enough to really prove the model. And that's the same principle here. I don't personally want to have a couple of products that I'm relying on, and then the odds, you guys been to Vegas, you know what the deal is. You can't lose everything all the time. But if you have that statistical sample relatively large, the math, hopefully doing the risk reward scenarios over and over and over again, hopefully the P&L curve will smooth out based on that alone. Exactly. All right, so sorry to get off on a tangent there about my pseudo risk management plan, but it's something I think about every day before I sit down. We're going to go to the break now, folks, and then we're going to come back and take a look at some stocks that may be some of the best shorts out there right now relative to profiles, and that big rally identified those for us yesterday.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Let's take a look at the XLE again really quick. I forgot to mention this. Talked about some targets initially around 80, and do I think is that a big move? No. Is it something to hang your hat on? I'm looking at this from a trading opportunity situation. Do I think crude oil is going to go back to like $100? No, I do not. I think it would blow some people's minds if that happened. I think there's some great trading opportunities if that started breaking some, having some technical damage on the weeklies here again. I think there'd be a lot of people that have to cover, and I think that would be not sad really, but anyway, I think 80 is going to be our first target, weekly unfair highs. And again, where were we trying to launch that from? 76.19. That's not a big percentage move, but that's kind of where I'm at with this. Do I think it could go higher than 80? I actually do, but that would be kind of the first of the targets that I'd be looking for. And then, to be honest with you, we might start seeing another profile on the daily, and that would be really, really cool if we saw some inflection points lining up on the daily and the weekly around that 80. We're going to take a look at the XLF really quick. You guys watch the show, you know how relatively bearish I am on this sector in general. Had a pretty good move yesterday, but got right into that area we were kind of looking for, which was around the 24.30 area. I think pre-market we're trading 24.30 and some change. So I don't mind taking a shot on this on the short side again. You're going to definitely have to have some help from the S&Ps, and the S&Ps just really blew a gasket yesterday, as you are all aware. Just go back to these and see where they're at right now, pre-market. Yeah, and this is, again, people coming to the show late, 2069. We're going to have to get back down below there now for me to start thinking about this on the short side. A close below would be awesome. But the fact of the matter is we basically traversed an entire 2038. Is that where we opened yesterday? That can't be right. Hold on. Well, we traversed an entire profile and closed above that profile. That's not real attractive to stay with the short. We talked about getting stopped out of that, but that's pretty damning for shorts right now. So just put your stops in on the XLF, because the S&Ps were just, if we start churning around here above 2069 and just kind of consolidating, that's more of a continuation pattern. If we don't get a reversal here pretty quick, this thing could kind of get away from us on the north side. Just keep that in mind. We're going to cover look at the notes here, and I promise you we're going to get into some stocks in just a little while. I'm comfortable buying these things right now on the inflection point again. The 129.06 on the 10-year. This is the June contract. I'm not fearful about buying this. I mean, I hope the S&Ps reverse a little bit. That would be somewhat helpful, but you got an inflection point to pay attention to there, and I like it. I like putting stops in and seeing where this thing can go, and this thing could go back into 129.23 and possibly even higher. A couple of other things we're going to cover. This is something that's always on my radar screen. We talked about possibly leveraging, getting back down below 973 on the bean trade. That happened, kind of got below and retested, actually. So this is pretty strong. I think these things could drift lower. I think we could see 942 again on the November contract on soybeans. We're going to take a look at healthcare. We had talked about this a little bit. Now having to get back, this is our daily situation. We talked about 71.74. In fact, yesterday or the day before, not really bouncing that well, not with the market here, and still kind of not getting back above our weekly and for high 72.70 yet. So clean and clear of 72.70 will be kind of the most attractive situation for the XLV, the healthcare sector, and that hasn't happened yet. Somebody asked me to look at this. I'm just going to pull it up. We got 15 seconds before the break. Good old FXCM. Is it a buy? I think there's better buys out there, put it that way. We'll be right back after the break, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Here's the Alcoa situation tomorrow. I believe it is. Got some earnings coming out on this. And we talked about just maybe getting out of this thing. This starting to edge up, and now lo and behold, we're above profile. So again, I think this is a wait and see. You just gotta be happy with what Alcoa has done so far. Let's take a look at a couple of other things here. UPS, I'm looking at the scanner. I'm just kind of allowing this thing. What I did is I pulled when we get a big rally like that, it usually kind of separates things and sometimes makes them really black and white on what to do. Now, would we have any follow through in the S&Ps? I really don't know that right now, but in the guise of the relative strength trading game, which I'm a firm believer in when it comes to trading stocks, what I did here is I narrowed it down pretty hard. I just took the S&P 500. I looked at the weeklies and dailies that were below the box, and I keep doing below the box or above the box. There's other cool things in here. The new box attempting to appear, that usually means some turnaround situations. Bottom, top, those are kind of stocks on the cliff or right at inflection points sometimes. I'm just kind of look at things that are just really on a long-term and intermediate term, just, I don't want to say showing their hand. So as we look across these, Motorola Solutions, Qualcomm, Garmin, Union Pacific, State Street, News Corp Class A shares, Walmart. Walmart's been one we've been talking about. Let's just go back to Walmart really quick. And this has not been the most exciting situation, but if the market does happen to roll over again, which we don't know that yet, this thing is kind of showing its hand. And we've talked about leveraging out the 83.48, 83.50 area. This is our long term. It's not the most exciting situation again, but sometimes boring is good in trading. It's refreshing to me sometimes. So this is the situation on Walmart really showing itself to, at the very least, not be a long. So if you've got Walmart sitting there and on the long side, obviously it's not a lot of pain, but if the market gives this thing some help, it could drift a little bit lower. So just be aware of that. Let's take a look at UPS. That's another one on our kind of double below profile situation. Here we go. This one, again, been showing its hand a little early, and we've got to take that for what it's worth. Going back and retesting former support on the weeklies and now resistance, and now we're just kind of drifting into no man's land. And what's really interesting about this is we are now getting down into recent unfair lows. Excuse me. I'm sorry. Let me get this out of the way. I'm sorry. Recent activity on the lows over here. Let me scroll back a little bit farther. Yeah. So, these lows back in July. Hold on. These recent lows back in July, these may be gunned for here. And we've also got a profile sitting here above price action. That's bearish. We talked about that all the time. So UPS could drift a lot lower, especially with some market help. This is not one I'd want in my long portfolio situation. All right, let me get this out of the way. Let's look at Weyerhaeuser. This is another one, probably a no-no as far as being long. Here's the situation here on Weyerhaeuser. $30 stock. Again, did the similar thing on the 34 general area. Now we're using the dailies kind of regulate this down. We've talked about this recently, and we got a rally back up into somewhat the neighborhood 33.65. I'm pretty sure we had talked about this. Now it's continuing to fall apart, especially showing itself with the market making a run like it did yesterday. We're going to also take a look at Delta Airlines. This is another one on the no-flies list. I had to say it. Anyway. Got that closed below last week, 43.63, and this week, as you can see, we've kind of been coming into that retest area on the dailies, the weeklies falling apart. Delta Airlines on the no-fly list. Let's look at Applied Materials. This was a stock I used to trade a lot. Similar situation to the other stocks we're talking about. This is not one to be putting your hopes and dreams on the long side. How do you trade this? How do you make money off of it? At this stage, stops above 23.29 and let this thing kind of drift and fall apart even more so. Here's the 240-minute regulation game. We always talk about this. Short-term traders, you got some. You're trading 5,000, 10,000 share blocks of this. You've got some leverage points here. These are all given in the scanner. Let's go in here now, and let's just kind of take off the major heat of the weekly, and let's see what's kind of popping up on our dailies here, and let's just kind of look at where inflection points are really lining up. Let's just take a look at Disney really quick. Co-America we talked about actually last week, and let's look at Ford. These are all stocks that are sitting around inflection points right now. So Ford, Disney, and Comerica. Let's take a look at Disney first, DIS. Let's just kind of look at this, see what we're up against. All right, so on the weekly, this has obviously been in the news. It's been one of the strong stocks. And the action yesterday kind of, consolidating below profiles, poked its head up one time. This is one based on that weekly profile not really wanting to appear yet. You'd want to start seeing at the same time we're trading below profiles on our daily, you'd want to start seeing an orange bar you'd actually want to start seeing that orange bar appear in the scanner. That's not happening. You see that green 10, that means 10 weeks above most recent long-term profile. So what we can do is look for situations like Nike, NKE. Now that is a situation that, let's just take a look at it. So we decided that Disney's not the best short right now yet. Okay, so Nike, this is a situation on Nike. I like this. We had pretty good run in the S&Ps yesterday. We're sitting below profiles. You've got that orange bar attempting to appear on the scanner. 139 is the leverage point on this. We backed off of it yesterday. I'm pretty comfortable trying to put a little bit of a riskier trade on with this. Stops above that 139, stops above the 139. Let's get some market help and let's let this thing kind of roll over. I have to put you on hold for 2 seconds, guys. Just on hold for 2 seconds. Al, are we back on? I hit a mute button, just making sure we're back on. Okay, cool. Here we go. All right, we're going to take a look at, we popped up Disney. Let's take a look at Ford Motor Company. We're sitting right there on the bottom here. Also, let's just, boom, pop it up. All right, so the long-term view on Ford, let's just look at this. Doesn't look that weak. Got a little bit of a floor there. So the way I'm looking at this, it's a relatively cheap stock. Nobody's going to dispute that. 1569 unfair lows on Ford. I'd like to see a weekly close just breaking some profiles, just like we did back here in September. That was, when we kind of got below the weeklies. This is kind of what I'm using to gauge some of these cheaper stocks. Started showing some weakness, and then when we got back above here, the 1474, 75, that was kind of when we had to call it quits on that. So these aren't huge moves. These are $2 moves in a $14, $16 stock. But again, these are sometimes no excitement's not a bad thing. And right now, what do you do with it? So I think Ford has kind of turned a little bit here, but let's just kind of back up and look at it from the dailies too. I'm looking at this DMZ is what I'm looking at from around 16 down into 1569, and I want to see this thing get down below 1569, just like we did before, to start looking at this from the short side. And remember, Alcoa, $13, $14 stock, it gave us $2. Ford could do the same thing. But remember to put your stops in, and I'd have to, on a long-term basis, put stops in above 1662. Oh, sorry. I didn't know what you were saying, Russ. Sorry about that. Let's take a look at General Motors while we're looking at Ford. Please look at good morning. I'd love to see a good morning. It's nighttime here. Here we go. All right. So this is, really happy that you actually had me pull this up, Russ. We started breaking, this is our daily, but let's just kind of look at the weekly. So considering that, we had started crossing some borders on some profiles on our long term, and we're kind of, this particular profile appearing below price action, was relatively bullish. Now that we've got some breakdown on the daily, would I say let's just go hell bent for leather and short this right now? I don't necessarily think so, if that's the way you're looking at it. I'm actually looking at it more than likely as a long opportunity, but I don't want to go long this thing until we get a close back above 37.27 or get a new profile appearing down here. Now, if we look at our Navigator, we made higher highs. We got above the profile here. We made lower highs on Navigator down here, which I love to look at this divergence in general. that kind of gave us that breakout to be looked at in a little bit suspect reasons. And that was, looking back 2 weeks ago when that started happening, that, maybe this is not the ripest opportunity in the world. But, what do you do with it now? I think that, and I'm looking at this from the long-term view, I like how we got back positive on Navigator, got above the zero line. I'm looking at General Motors just in the sense that right now we've got to get back above 37.27 to start going long. And you might be saying, well, it's cheaper to buy it here. Well, we may have a new profile appearing down here. That would kind of give us a little bit more leverage at this stage. But right now, can't really do anything with it. On a long-term investment type situation, I think you're okay with stops down below 34.5, so to speak. But that's kind of the way I'm looking at General Motors. All right, so let's go back into the scanner. Let's just kind of look at some things that actually this was something we had looked at a while back. Comerica. All right, so we looked at this, and we looked at it from the short side, and we looked at that 46.74, and why did we do that? We had some things that were going on here. We finally broke down, started retesting these. I actually like this to relax back down into 41, that general area. I mean, we obviously cooperated with the market yesterday, but remember, we're kind of still floating around below profiles here. Good news is the stops can be oriented on this particular trade above 46.58 up into 46.74. So that's kind of the cool news. I like how this is kind of trailed down, not had a lot of market relevance, and I like that DMZ 46.50 to 46.74, and I like this from the short side. All right, we're going to take a look at from the scanner, Becton Dickinson and Company, BDX. Let's just take a look at this one. All right, so talked about, this was flagged, and the reason I flagged it was because got a little bit of a, in the middle of a fair auction here, and sitting at the bottom of a daily inflection point here. So, what do you do with this now? All right, so let's just kind of look back a little bit with this, and let's look at our weeklies. I like this from the long side. 138.81 is pretty expensive stock. Putting stops down below there, 138.81, and getting back in this above on the long side, above this 141.75. So I know we've had a little bit of a breach of profiles here on the daily, but I'm looking at this from a little bit longer term view, and I still like the way it's set up here. Guys, we're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hey guys, this is the Australian dollar. We talked about waiting for it to come up into some inflection points, I think even yesterday, to just get some shorts off again on this. We had, the Australian government or central bank said they're not going to lower interest rates right now. That gave it a little bit of a push forward into that DMZ we talked about. Just a nice little example of how to wait. We talked about 76.93 up into 77.19, that DMZ. It's about a, what's that, 20, 25 pip, kind of like high pressure area. That, happened, and, the Australian dollar doesn't move significantly, especially down at these prices, but nice little trade. The yen, we got to take a look at that. We had talked about, the dollar possibly getting a little weaker, and we were sitting at some inflection points yesterday at 118.90. Now we've just traversed the entire fair auction. What do you do with it now? Talked about never really looking at the yen from the short side. I don't think you look at the yen from the short side, even at this inflection point, 120.34. So that's my take on the yen. Just kind of block the short side out, just like some of the Treasury comments we've had continuously. Let's take a look at one other stock, TSO. This is one that I've just been blowing my mind for a while. Here we go. So 90.57, we came off this not to give a historical account, Monday morning quarterback here, but this was a relatively strong stock. We kind of had that reversal. 90.76 came off, and then we got some confirms in one kind of fail swoop, 90.57. So, right now, where's the stock headed? A retest back up into that 90.57, 91.76. We could start seeing much lower numbers in this, down into 76.43. So that's pretty much look out below on this right now. I know this is a high flying stock, but we've had some technical damage, and what we got to do now is just kind of wait and see if we go back up into that area. It's not the best short in the world, but this thing has been due a pullback, and we may actually get one at this stage. Michael Kors. God, I have no idea how this company. This is just. Anyway, Michael Kors, one of the kind of the weaker instruments, got it off the scanner. What do you do with it? You don't buy it. That's exactly what you don't do with it. This has been kind of looking at the long term, the inflection points, the weekly. Market pulls back. This thing seems to go lower. This is kind of sideways. Market goes up. This goes sideways. Market goes down. This thing goes down. So we're looking at Michael Kors still as a short, and stops above 65.49 on Michael Kors. Stops in, walk away. Newmont Mining, before we end the show, let me just take a look at this. All right, so what do you do with this now? Sitting on the kind of the floor down here, been consolidating down here. I don't like the way this is acting. I know this kind of could be a basing action in a lot of people's book on a long term, but I think could have been acting better, especially with the gold situation, and shorts with stops above 22.65 on Newmont. Don't have time to look at McDonald's. I'll just pull it up on the charts so you guys can see it. Guys, you've been great. Stay tuned for Steve Rhodes. He's going to be up shortly, and I'll be back tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.